Today, let's demystify dollar cost averaging, a simple, powerful way to invest. Think of it like your weekly food shop. Sometimes apples are cheap, sometimes pricey, but you buy the same amount each week and the cost averages out. With investing, you do the same. Put in a set amount regularly, no matter what the market's doing. When prices drop, you buy more shares. When prices rise, you buy fewer. This takes the stress and guesswork out of investing. No need to time the market or react to scary headlines. Dollar cost averaging keeps you disciplined and stops emotional decisions. It's about building a routine, like brushing your teeth, but for your money. You don't need a finance degree or a crystal ball, just a regular habit and a commitment to your future. It's investing made easy for everyone. There are two main ways to invest: dollar cost averaging and market timing. Dollar cost averaging is steady and consistent. You invest the same amount regularly, rain or shine. Market timing is trying to buy low and sell high, but even the pros rarely get it right. Market timing is stressful and emotional, leading to rash decisions and missed opportunities. Dollar cost averaging removes emotion and automates your investing. You don't need to obsess over news or worry about the right time. It's a boring, brilliant habit that wins in the long run. Consistency beats cleverness. With dollar cost averaging, you're the tortoise, not the hare. And in investing, the tortoise wins every time. Let's see how this works in real life. 13. Meet Sarah, a nurse who wants to save for her future but doesn't have time to watch the markets. She decides to invest £100 every month into a simple fund. In January, shares cost £10. She buys 10. In February, shares drop to £5. She buys 20. In March, shares rise to 8p. She buys 12.5. In April, shares jump to £12.50. She buys 8. Without any guesswork, Sarah buys more when prices are low and less when they're high. Over 4 months, she's invested £400 and built a solid foundation. She didn't have to make tough decisions or react to market swings. Her plan did the work for her. This is the magic of dollar cost averaging, turning market ups and downs into an advantage. Consistency, not timing, is her secret weapon. No stress, no drama, just steady progress. Let's see how Sarah's results compare to someone who tries to time the market. 15. Over 4 months, Sarah invested £400 and bought 50.5 shares. Her average price per share? About £7.92. Now, meet Tom. He waited, hoping to time the market, and finally invested his £400 when shares hit £12.50, buying just 32 shares. At the end of April, Sarah's shares are worth £631.25. Tom's are worth £400. Sarah's calm, automated approach beat Tom's anxious guesswork by a mile. Dollar cost averaging let Sarah buy more when prices were low, lowering her average cost. Tom's hesitation meant he bought at the peak. The lesson? Regular, steady investing wins. No need for perfect timing, just a simple, consistent plan. Sarah's journey was stress-free and rewarding. Tom's was filled with doubt and missed opportunity. The results speak for themselves. 13. Dollar cost averaging helps manage risk by spreading your investments over time. You avoid the danger of investing everything right before a crash. It also helps you stay calm. Market dips become opportunities, not disasters. This strategy builds a powerful habit. Investing becomes automatic, like paying a bill. You don't need to motivate yourself each month. It just happens. Over time, this discipline is what builds real wealth. Plus, it's easy. No need to track the market daily. Set your plan, automate it, and get on with your life. Your money works for you in the background. Simple, low effort, and effective. That's why regular investing is your best friend. Worried about losing money? History shows markets recover over time. With regular investing, you buy more when prices are low, boosting your returns when markets bounce back. Think investing is too complicated? Dollar cost averaging is designed for beginners. Start with a simple, broad market fund. No expertise needed. Unsure if now is the right time? The best time to start is today. The exact starting point matters less when you invest regularly. Don't think you have enough? Many platforms let you start with as little as £25 a month. The habit matters more than the amount. Start small, build confidence, and increase as you go. The journey begins with your first step. Ready to start? First, decide how much you can invest each month. £25 or £50 is a great start. Next, open a stocks and shares ISA or similar account. Choose a provider with low fees and a user-friendly platform. Don't stress about picking individual stocks. Go for a low-cost index fund or ETF for instant diversification. Set up a recurring payment. Automate your investment every month. Pick a date that works for you, like after payday. Once it's set, you're officially an investor. No need to watch the markets daily. Let your plan work in the background. Stay consistent, and your wealth will grow. 12. To succeed, follow these golden rules. Be consistent. Stick to your plan, no matter what the market does. Think long-term. Ignore short-term ups and downs. Don't check your portfolio every day. Review once or twice a year. Don't panic during downturns. See them as opportunities. Remember, markets recover over time. Avoid knee-jerk reactions. Stay calm and keep investing. Review your contributions annually. Raise them if you can. Even small increases make a big difference over time. Adjust calmly, not in response to headlines. Stick to these habits, and you'll build a secure financial future. Dollar cost averaging rewards patience and discipline. 13. Dollar cost averaging isn't just for experts, it's for everyone. It removes guesswork and emotion, replacing them with consistency. You buy more when prices are low, less when they're high. No need to time the market or stress over headlines. This strategy builds wealth quietly and steadily. It's accessible, low stress, and proven to work. The most important step? Just start. Take control of your financial future, one regular investment at a time. Start small, stay consistent, and think long-term. You'll be amazed at what you can achieve.